Ladies and gentlemen, welcome back to the channel. This week is going to be insane for markets. I'm going to give you a rundown of the catalyst that we have and my expectations for this week. We're also going to cover Tesla stock and some of the news that has come out in the past 12 hours or so that you need to know before the trading day starts tomorrow. I will also say that crypto has broke back above 90,000. It was looking a little dicey there when you hit a low a couple of hours ago around $87,000, but it does look like you're approaching that 91,000 level again, and well, maybe we get back on a better footing to start this upcoming week for crypto, which can lead to some upside in stocks as well. We have a lot to discuss in a short amount of time, ladies and gentlemen. Hit that like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys want to come trade with us and come invest alongside us in the trading community. That link is in the description of today's episode. But with that said, let's get started. Now, in your Tesla specific news, let's start there. And now this is not specifically Tesla news, but it does seem like this could become Tesla news. It says Apple's chip chief Johnny Shravi has informed Tim Cook he is seriously considering leaving the company and said he would likely continue his career elsewhere rather than retire. And, you know, for the opportunity that's ahead of Tesla, I mean, Tesla's going to start attracting a lot of talent. And I wouldn't be shocked if, you know, Tesla poaches some people from companies like Apple, Microsoft, and others. Now, this is massive news today for Tesla. Tesla's robotaxi app is now available to download in Australia for all iOS users. So it would appear that some kind of robotaxi launch in Australia could be coming soon, which, I mean, stock's really going to love that. Now, Hyundai's self-driving unit 42 Dot has released a new video showing off its end-to-end autonomous driving software on the roads of South Korea and parking. Quote, it drives using only 8 cameras mounted on the vehicle without relying on HD maps. It utilizes a 400 TOPS class NPU to implement the NOA, the navigation on autopilot function on highways and in urban areas. A massive new $450 million Tesla Megapack battery energy storage system is now operational in Victoria, Australia. It's the biggest completed battery project on Australia's main grid and one of the largest battery projects in the world. It features 444 Tesla Megapacks and 3 Toshiba 500 kV HV transformers for a total of 600 megawatts and a capacity of 1,600 megawatt hours of storage. And we can now see that the Tesla Robotaxi app is available for iOS users to download in Japan, Thailand, Hong Kong, South Korea, Australia, Taiwan, Macau, New Zealand, Mexico, the US, and Canada. So likely next year we see many of these countries start to begin some form of robotaxi operations. Arguably, the biggest one is, again, the US, but Japan's going to be a big market for this as well. And we know that Waymo is launching operations in Tokyo in 2026. So if Tesla can follow suit with that, you know, that's going to be big news for the stock. Police in West Iceland say they have now traveled more than 1 million kilometers in Tesla vehicles, marking a significant shift towards greener policing. Now, this is also a pretty cool update from the Tesla team in the app. It is V4.51.5. It has a new feature on the homepage that lets you rotate your phone to see your car's location in real time with an arrow that points towards your car as you move. It also shows exactly how many feet away your car is. Now, this week is really going to be insane from a broader market perspective. Now, I think a lot of the stocks that we are invested in, I think a lot of you guys are also invested in like the AI stocks, the AI theme, the, you know, hyper growth areas, probably some small caps, right, mid caps. I think these are going to be the areas that really benefit this week. And there's a couple of reasons why I'm really bullish on this week. But again, just to reiterate, if we're looking ahead towards 2026, right, it is logical to assume that we make some progress in lowering inflation. It's logical to assume that we get a couple of rate cuts next year. We know we get a new Fed chair in May. Okay. We know the big, beautiful bill, all of the, things Congress argued about for months, start to actually help the consumer, like no tax on tips, no tax on overtime, being able to write off interest on car loans, all of that. But it doesn't kick in until around mid-year when people file taxes. Okay, so that's why you're not really seeing a benefit from all of that stuff right now. Now, there's changes in CapEx from a business structural standpoint that also kick in about midpoint next year that are going to make the second half of 2026 look really good. Okay, so you have all of that working for you. AI is alive and well, continues to be investment. I think continued applications and broader adoption of AI is only going to continue from here. Okay, real estate, I believe, can start to pick up next year. And I talked about this in previous videos, but I used my home as an example. I got, it was like a $500 mortgage when I first got the house. Today, it's like an $800 mortgage. I've done a lot of work to it. There's over $100,000 in equity in that home. But if you're somebody that was looking to buy that, your mortgage is going to be like $2,000 a month today. Okay, which even if you have $100,000 of equity in your home that you're looking to sell, you might not qualify for a $2,000 mortgage if you're, the average working family. Okay, so as mortgage rates come down, as people can afford to move, that's going to give people a lot more money when they sell their old home, and people are going to spend. So I think that's one big sleeper catalyst for next year and for this economy. So it's very logical to have bullish expectations for next year. Now there's questions: how many cuts are we going to get? How much is inflation going to come down? All of that is a fair question. But with the other things we're talking about, I don't think it really matters. It's like the cherry on top, right? Rate cuts. Who cares if all of the other things happen, okay? This week, we're going to get the Fed, and we're going to go over that in just a second. And there's one reason in particular that I'm really bullish on this upcoming week, and it has to do with the Fed. But first, earnings. There's still quite a few important companies that are going to be reporting earnings. Tomorrow in After Hours, Toll Brothers will report. Tuesday, you get Ollie's and AutoZone in pre-market. In After Hours on Tuesday, GameStop, Cracker Barrel, Casey's, Braze, Dave & Buster's. Wednesday pre-market, you have Chewy. In After Hours, you have Oracle, Adobe, Synopsys. Thursday, you have Broadcom, Lululemon, Costco, and Restoration Hardware. The big one is Wednesday and After Hours with Oracle. Oracle was almost a $1 trillion company at one point. And then in the last 2 months, the bond issuance that Oracle was doing, the yield, or like the interest rate on that, went to 8-10%. Very unusual for, a $1 trillion company to be priced like it's a small cap in the bond market. Okay, so basically bond investors were saying, yeah, Oracle, you're just about as risky as this unprofitable small cap company. And these were like 20, 30-year bonds. So that kind of spooked some AI investors. That kind of caused some of the pain in the AI trade, among other things that happened. Obviously, government shutdown is one of them. That was a big issue. Now, let's be logical here. What is Oracle going to say on Wednesday? They're going to say, things are going great. There's no problems. Business is businessing as usual. Okay, that's what Oracle is going to tell you. Just Oracle saying, hey, we don't have a problem. We don't know why investors did what they did, but we're doing fine. That in and of itself could be a big catalyst for this market on Wednesday. Now, Broadcom, obviously another important one for the AI trade. Adobe, more of that software AI trade. Costco and Ollie's and Restoration Hardware. How is the consumer doing? Okay, we already know how the consumer is doing, but Wall Street, they want to be cradled like babies. So, this is going to be looked at as important as well. Let's get into the economic calendar here. So, on Monday, tomorrow, you have consumer inflation expectations for November. We've seen on Friday the Michigan Consumer Sentiment Survey. 1 year and 5 year ahead inflation expectations fell to the lowest level you've seen in 11 months. Okay, so making some real progress there on inflation expectations. You have a 6-month bond auction, 3-month, and a 3-year bond auction, but that's more dependent on the Fed, and that's the short end of the curve. If you ever hear somebody talking about the yield curve, that is the short end of the curve, and then like 5, 7, that's like middle of the curve, and then 10, 20, 30-year bonds are like the long end of the curve. The Fed does not affect the middle and the long end of the curve, right? That's why the Fed's decisions to raise or lower interest rates do not move mortgage rates, right? The 10-year Treasury yield is more of a function of government policy and inflation expectations than anything else, and actual inflation when it comes down to it, okay? So that's going to be a catalyst tomorrow. On Tuesday, you have the NFIB Business Optimism Index. Don't really expect that to do much, but we'll see. The ADP employment change, the weekly numbers come out Tuesday morning as well at 8:15 in the morning. At 10 o'clock in the morning, you have JOLTS job openings for September. That one's not going to be as important. October is the important one. The expectation is 7 million. Best way to look at this is as followed. The higher the number, the better the labor market. The lower the number, the weaker the labor market, okay? That's just the easiest way to interpret that. So if we come in with a really low number, rate cut odds are going to skyrocket. But it does mean some recession fears would go up as well. Okay, now we've gotten the initial jobless claims numbers, and those have been really good, hitting 7-month lows. The last one we had hit almost a 5-year low. Kind of unusual, the weakness we had in the labor market, and then the strength that we're now seeing in the past week or two. It's been volatile to say the least. Wednesday is the big catalyst, okay? We talked about this in depth over this weekend, so I don't want to go that far in depth with it. I'll just kind of give you the summary, okay? One, we get a new Fed chair, a new Fed Jerome Powell in May. So, Wall Street's going to care about this, but it's not going to be definitive, right? Because we know you're going to get somebody else at the chair position, another bullish Fed official. We know Fed Bowman, Fed Williams, Fed Waller, Fed Moran as of now are your bulls. But then you're going to add somebody else to that, okay? So it is going to skew the numbers more towards the bullish side. Here's what is kind of the reason I'm so bullish on this upcoming week, okay? For 2026, and I should say first, December 10th, this upcoming week, this Wednesday, you're going to get a rate cut. There's an 85% chance of a rate cut. The Fed always does what the markets are pricing in historically, like almost 50 years and running at this point, because they don't want to upset the markets. They don't want to cause a crash that they have to then start to accommodate for. But what is really exciting about 2026 is you're not pricing in a cut January 26th, 2026. The odds of a cut in January are 27.3%. Okay. For March, you're not pricing in a cut. The odds are 38.7%. In April, you are pricing in a cut at 40.3%. June, you're pricing in a pause. July, you're pricing in a pause. September, you are pricing in a cut. And then you're pricing in a pause in October and a pause in December. So you're only pricing in 2 cuts next year. I think that is very in line with where the Fed is going to be. I think the Fed is more going to be between 1 and 2 cuts, kind of at the midpoint of that. But bottom line, you're not going to get bearishly shocked this week. The Fed's not going to say 0 cuts next year. The Fed's going to say more than 1 cut, but probably less than 2. So bottom line, it's going to be very difficult for the Fed to bearishly surprise investors. You're only pricing in 2 cuts next year. Now, if we were pricing in 4 cuts or 5 cuts or something like that, then it would be quite easy to shock investors. In fact, look at this, right? So the odds of only getting one cut next year stand at 6.9%. Okay, the odds of getting 1, 2, 3, 4, 5 cuts next year is double that at 12.9%. So, like, if the Fed were to come out and signify 0 cuts or 1 cut or something, that that might be a disappointment. But I mean, you have a higher odds of getting 5 rate cuts than only 1 rate cut next year. So, again, with how many bullish Fed officials we have, you're likely going to get 2 cuts priced in. I think that's what the Feds, or pretty close to 2 cuts actually priced in. That's important because we get a dot plot on Wednesday. Okay, summary of economic projections, where the Fed goes out and they place their bets, they place their predictions for the economy, for inflation, for how many cuts they're going to do next year, and Wall Street reacts to it. Okay, now I will also tell you the last Fed meeting did not go over well with markets. Typically, you don't have 2 Fed meetings in a bull market that are taken poorly. Okay, so mix that with the fact that markets are only pricing in 2 cuts next year, and it's like, okay, that's pretty in line with where I think the Fed is. And honestly, look, okay, 2 cuts priced in here at 29.4%. 1 cut is priced at 20.2%, and 3 cuts is priced at 24.7%. So the odds are pretty closely aligned. Okay? Either way, whether we get 1 cut or 3 cuts, it's not really going to be a big surprise to investors. And again, we get a new Fed chair in May. So if the Fed says like 1.5 cuts, Wall Street might just look at that as 2. Right? Because we're going to get a new Fed chair that is going to be more bullish than Fed Jerome Powell. Okay, so that's the real reason I'm really bullish this week. I also think Oracle is going to tell us that things are fine, that there's no problems, okay? Kind of like NVIDIA. Everyone freaks out ahead of NVIDIA earnings. As I said before NVIDIA earnings, like, dude, they're going to tell us that things are fine. They're going to have good earnings, right? NVIDIA is not going to miss. Kind of the same thing with Oracle, but Oracle doesn't move the markets as much, but Oracle was kind of a big drag on this AI trade in the last 2 months, whereas if they clarify that things are going fine, that could be a big benefit to the AI trade and to more of the risk-on trade following Wednesday. Now, on Thursday, you will get the balance of trade for September. This is going to feed into GDP numbers. September is a part of Q3, so the bigger data starts to come out December 16th. That's the other part of this. I don't think the Fed's going to want to signal or shock the markets too much before you get big economic data the following week. So not this week, but next week, we're going to get the jobs reports that we missed. We're going to get the GDP data that we missed, personal spending data and retail sales and all of that. I don't think the Fed's going to want to come out and say, oh yeah, 0 cuts next year before we potentially get some really bad data the next week, right? It would be too much whipsaw, too much volatility. I think the Fed wants to be pretty closely aligned with markets because based on how the data comes out, the markets are going to move the expectations for cuts, right? I don't think the Fed's going to move them. So that could allow for this week to be very bullish. Now, on Thursday, you will get initial jobless claims. Again, this came in at almost a 5-year low, second lowest reading in 5 years at 191,000. We're expecting 205,000. So we'll see where that comes in. That could definitely move the markets as well. But I think on Thursday, you're going to be reacting to the Fed mostly. On Friday, you don't have much, but you do have a speech from Fed Paulson, Fed Hammock, and Fed Goolsbee that will be speaking. Fed Hammock, Fed Goolsbee, and Fed Paulson are kind of more of the bears on the Fed. So If there's maybe they're sending them in to calm the markets down. Who knows? We'll see on Friday. Then again, from a tactical perspective, Wall Street is underperforming the S&P. They typically do. But in 2025, there was so much volatility. There was so much uncertainty, a lot of it from a trade perspective. Then you had the government shutdown, that hedge funds and institutions on net were sellers of stock in 2025. They sold about $60 billion worth of stock on net. So imagine they bought, 500 billion. They actually sold about 560 billion, right? And I'm making up those numbers there, but that's the idea, right? They sold more than they bought, which is kind of unusual to say the least. And historically, 80% of firms underperform the S&P. It's a very hard index to beat, but that's the standard, right? And this is why you tend to get that Santa Claus, that end of the year rally in December, because hedge funds and institutions, they want to beat the S&P. It's hard to gain new clients, and especially big ones, if you underperform the S&P, right? But if you're up 30% this year as the S&P's up 15, or even if you're up 17% and the S&P's up 15 and you're a hedge fund, that looks really good. So I do think, this risk on trade gets a bit of a bid into the end of this year. Bitcoin as well is something to watch for. Bitcoin in the last couple of hours has really made a recovery here from $87,755 at the low, again, just a couple of hours ago, to where it is now at $91,400. That's a swing of almost $4,000 to the upside. And Bitcoin tends to lead what stocks do. So based on what Bitcoin is doing, it looks like we could have a really good day on Monday. Now, if we can get to 100,000 or pretty close to that, that's where you probably start to see a lot more shorts covering on short positions in Bitcoin. You probably start to see more of a euphoric, rally in the markets. And what's interesting about this upcoming week and really throughout the month of December is the S&P is already pretty close to new all-time highs. It's been lifted by the Mag 7 stocks. A lot of the internals of this market still do not look great. So if we get kind of what I'm expecting from the Fed, which is kind of in line, no big shockers, if the tactical rallies start to kick in, the chase begins to kick in, all of what we're talking about, I think it's the broad markets that could rally here and lift the S&P. I'm not as bullish on Mag 7 this week outside of maybe Oracle and the reaction that you could see post Oracle earnings. I'm more bullish on the small caps, the mid caps, the AI trade for this week. Even then, for a tactical trade, hedge funds and institutions, if they're trying to beat the S&P, they're likely going to be putting money into these higher beta areas. And I think specifically for Tesla stock, Tesla is, one of the larger companies, but it is higher beta. It is entering into these new massive growth phases with robotaxi and soon to be Optimus. And the chase is on, right? Elon's compensation package approved. Elon's going to be with the company for 10 years with ambitious goals to grow Tesla from a $1 trillion company today to an $8.5 trillion company. But let's be honest, some of the higher tiers of the compensation package, like the $400 billion in EBITDA, NVIDIA did like $50 billion in EBITDA in the last 12 months. If Tesla were to hit those numbers, Tesla's a $15 trillion company, okay? So I think there's a lot of things that are working for Tesla. Robotaxi expansions likely coming here in the next couple of weeks. Obviously, Optimus is going to be a big story next year. Robotaxi is going to continue to be a big story. Even look at the charts themselves, right? You are locked and loaded for an explosive move to the upside here. It's really just a matter of, does it happen this week or next week, in my opinion, right? And if I'm looking at the catalyst lineup for this week with the Fed, with Oracle earnings, with where the markets are priced, I think it's this week. I think you get that break into the 500s this week, okay? It might be back half loaded, like after Wednesday's Fed meeting. Thursday and Friday. I wouldn't expect anything too crazy before then, although people might front run it, and we'll see. If we have a really strong Monday, Tuesday, Wednesday, like, you might get a little bit of a Selvin news event on Thursday following the Fed, and then Friday could be a good day. So from a tactical perspective, the days in which that are really good can vary, but I'm expecting an inline Fed. No big shocker there. Looking ahead towards next week's data, that's insanely bullish. I'm expecting good Oracle earnings, great Oracle earnings, and Oracle to say things are fine. Wall Street just panicked. And the tactical Santa Claus rally to kick in this week. And again, in my opinion, it's going to take Tesla into the 500s this week. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you've not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community. With that said, have a great rest of your day, and I will see you in the next one.